Hey everyone, Ryan B with Practical Forex Trading, coming to you with this week's analysis on gold. So gold versus the price of the dollar. It's January 24th, 2021. Been off for a while, creating a digital trading course. If you are interested, the link is in the description below the video. Okay, let's get going. So I'm looking at a daily chart here for gold. Obviously, it's overall it's an uptrend. It did cool off after reaching those $2,000 highs. So it looks like we might be seeing some more bull moves though here soon. Let's go ahead and map this out. So the first thing I'm going to do is I'm going to draw a trend line, and I'm going to establish my ultimate lows. Excuse me. And what that does is that really connects the ultimate lows along this trend that started back in late 2018. So now that I've established that angle, what I can do is clone this line to make sure to find nearer support and resistance zones that are more relevant to trading today or this week. So we can see here, once I clone that trend line and move it up, that this line, in fact, does a pretty good job of connecting these ultimate highs and then these lows here, support and resistance, over time. And by doing that, we see that support's really not too far away from our current price. At the time of this recording, it's $1,854.80. The market has not opened yet this week for trading. So let's go ahead. Next thing we want to do is map out horizontal support and resistance. So what you're going to see is we've drawn these trend lines, but price really isn't sitting on it. Right, it's kind of hovering above, and that can be a little bit dangerous because it doesn't necessarily mean this is the best entry point to get in for a buy. So let's go ahead and map out horizontal support and resistance. And if I place a line here with the 1760 line we see here, for a while it was the high, then price came back down and touched it, being the low. So now we see that price has moved away by $100, but we're still kind of in what we'll call sideways trading. Price really hasn't established a new high yet. This most recent high of 1950 was slightly lower than before, so it's what we call sideways trading. So what you're going to want to do is, if you're bullish on gold, is potentially wait for a better opportunity to enter the market. If I draw another similar horizontal support and resistance zone line, we can see here, the reason I do it here is because it was the ceiling for a number of days, then it became the floor, so more support and resistance. Now I've got myself a zone. Here what I can do is take a rectangle tool and shade in the support and resistance zone. So the good news is, even if gold was to fall down to $1,800 or so, even all the way down to $1,775, it would still be a buy in this overall big uptrend. So let's go ahead and apply some moving averages. I'm going to put a 20 on here, 20-day fast moving average. So here we can see that price is still underneath this fast daily moving average. So in some ways, it's still kind of a sell. But because the overall trend is bullish, I'm not going to be selling against the trend. But what I'll probably want to wait for is price to move back above the fast daily moving average. Because what happens when it does? Well, historically, we can see when price is underneath the fast daily moving average of 20 and moves above, we typically see a bull run of some sorts, whether it be a long one like this one or a short one like this one behind it. So my anticipation is that we may see prices carry down here. USD will shore up a little bit this week potentially before our next move. So I'll be looking for gold to move up again. However, it could take till mid-February till we see that kickoff. All right, everyone, have a great week trading. If you are interested in learning how to trade, please check out our course. Link is in the description. Have a great day.